This is ETF Battles. I'm Ron DeLegge, where the chief concern of this program isn't 200-day moving averages or national GDP or asset flows. It's none of that noise. The chief concern of this program is A, who's about to get beat up, and B, how can we help you to make informed investment choices in an overcrowded ETF marketplace that resembles the Costco parking lot on a Saturday morning. I'm thrilled to have you with us because today's ETF battle is a historical moment for this program because it's the first appearance of leveraged ETFs on our weekly show. Yes, these are funds that attempt to magnify their gains by using preset leverage points, for example, of 200% or 300% daily leverage or some other predetermined figure. Today's scuffle is between two technology-focused equity products. We've got the ProShares UltraPro QQQ ETF. That's TQQQ versus the MicroSectors FANG Plus 3X ETN. That's ticker symbol FNGU. You can think about this bout as a sword fight between two high-powered technology products. In culinary terms, today's matchup is like habanero chili peppers versus habanero chili peppers. And let me tell you, friends, it's about to get muy caliente, amigos, as you're about to see. So helping us to judge this matchup between TQQQ and FNGU is Dave Kreinces with ETF Portfolio Management and Mike Akins, CEO at ETF Action, the best in the business. Guys, welcome back to the program. Great to see you.
Hey, Ron.
Good to be here.
So the four battle categories are cost, exposure, strategy, performance, and a mystery category. So my scorecard is ready, and so is our shot clock. We're going to go through the four battle categories one at a time. Each of you are going to pick TQQQ or FNGU as the winner in each respective battle category. You've got 30 seconds to do that, and we're going to start with Mike. Let's begin with the first category, cost.
All right, so cost on three-timed leverage products is pretty irrelevant, but they're both 95 basis points, so I would say that the cost is a coin flip. The one thing to note is structure. TQQ is going to be an actual ETF exchange-traded fund where the FNGU is more concentrated and therefore doesn't meet diversification and is structured as a exchange-traded note, which means it brings with it counterparty risk. So for that simple fact, I'm going to give the nod to TQQ because of the more straightforward structure of the ETF.
That's a good start. How about you, Dave? What's your take on cost?
Hey, Ron, before I get into cost, I just want to say, this battle is incredible. It's really Michael Jordan versus LeBron James. And, in full disclosure, ETFPM is trading both of these incredibly innovative ETFs. And on cost, I agree with Mike. The 95 bips is equivalent, but I also give the win on cost to TQQQ, both for structure and voter diversification.
Okay, let's move on to the next category, which is exposure strategy. Dave, continue.
Investors should be extremely cautious with leveraged ETFs. Both of these securities crashed by over 70% last quarter. And leveraged ETFs don't always work as expected. As for FANGU, the concentration in 10 positions may outperform long-term, but the higher portfolio concentration is a bigger risk. The FNGU security is an ETN, and FANGU's position rotation process is another big variable. As for the unleveraged NASDAQ 100, in many respects, QQQ is the next generation S&P 500. QQQ is now one of just 4 ETFs to surpass $100 billion in assets. So the unleveraged NASDAQ 100 ETF is a top core index holding, and it's a much bigger net of portfolio positions to increase your chance of catching the next Amazon and maintaining appropriate exposure. So we give the win on strategy to TQQQ.
Okay,
let's move on to Mike. What's your take?
First off, I can tell I'm in over my head when it comes to leverage products today, so a hat tip to my battle partner there. But I would argue that from an exposure strategy perspective, it really comes down to what you're trying to achieve. But TQQQ, which tracks the NASDAQ 100, is going to give you a broader diversification exposure. It's a more traditional index metrics, captures that innovative side of the U.S. economy, whereas FNGU is a little bit more of a mixed bag of 10 names. So I'll give it TQQQ, but mostly I'll just add on to what my battle partner here had to say.
Okay. And going back to you, Dave, you mentioned TQQQ and exposure strategy versus FNGU. When you said FANGU, I got distracted and I was thinking ragu gravy, like the pasta gravy. So what was your winner on exposure strategy?
It was TQQQ.
Okay, I just wanted to make sure of that because I was thinking, like I said, ragu, for some reason, ragu
I know, that's
gravy.
good sauce.
We need to move on to performance. And why don't you take it away? What's your battle winner on performance between TQQ and FNGU? Dave.
So for performance, this is a priceless lesson for everyone. Some people say Einstein called compounding the eighth wonder of the world, and here's why. Hold on to your seat because this past decade, through mid-June, TQQQ delivered 4,313%, or 43 times your money. That's 10,000 growing to almost 440,000 in just 10 years. And this return is also 9 times larger than the unleveraged NASDAQ 100 return of 466% this past decade. So on an annualized basis, TQQQ gained 46% annualized, which was roughly 2.5 times larger than the unleveraged index, which delivered 19% annualized. So what you see here is the magic of compounding. Over just one decade, a double in the annualized return produced a 9 times increase in the total return. So leveraged ETFs, specifically on the largest asset classes, do not need to deliver the exact multiple return every year. And because of their mechanics, they don't. They compound daily, which distorts annual returns. Yeah. But this is all just part of new tools that work differently. Now, clearly, strategic leverage diversification in TQQQ produced a carton of extra retirement nest eggs. TQQ's 43 times your money in its rookie decade is also 18 times the return of the S&P 500, which delivered 235%. Most investors can't beat the S&P. So this is well beyond historic. And because of the unbelievable performance, we're now calling TQQQ the American Dream ETF. At the current return rate, listen to this, this is crazy. At the current return rate, a $500 seed investment could grow to $2 million in 22 years. But even if the rate falls to 26% annualized, $500 would still reach $2 million in 36 years. So future returns can never be guaranteed. Even positive returns can't be guaranteed. But investors should know that TQQ has been virtually impossible to beat this past decade. And as for FANGU, it actually did beat TQQ by 11% over the past 2.5 years since FANGU's inception, returning 68% versus 57%. But FANGU's concentration and position rotation process are higher risk. And while I love FANGU's extra exposure to Tesla, NVIDIA, and Netflix, the performance win on a risk-adjusted basis still goes to TQQQ.
We've had numerous shot clock violations thus far. They've been all duly noted and will probably continue to go unenforced. Mike, your last take on performance before we recap this battle and who wins?
Oh my. Okay, let's start with this idea of the American dream. I would just remind people how that worked out during the financial crisis and the doctrines that led to the financial crisis. But I definitely agree that used properly, these strategies can provide enormous compounding, but compounding works in the way up just like it works in the way down. Just want that fully disclosed out there. So, I would use my Home Depot example for this perhaps, in that, just because I can buy certain tools at Home Depot doesn't mean I have any business using them. I think the same thing applies to strategies like this. If you don't know what you're doing, they can be extremely dangerous. That aside, from a performance perspective, the simple fact that FNGU or FANGU, has exposure to Tesla, has exposure to Amazon, a lot of the FANG names, why it is named, it's crushed it recently, even relative to triple Qs. So I'll give the nod to FANGU on shorter term relative performance.
Okay. And thank you for pointing out those exposures too. This is the FANG Plus Index. that FANGU follows. So that's a little bit different than the traditional FANG index, as it's noted. So let's move on to the final battle category. This is the mystery category where our judges get to choose a factor or maybe several factors that are important and crucial to their analysis. Mike, take it away.
All right, well, my mystery chart is just going to be very recent, starting on February 18th and going through March 18th of this year. Triple Qs and FANGU respectively lost 2/3 of your money and 3/4 of your money. And unless you have the stomach to roll with that strategy and see it back through on the upside, it's just a stark reminder of how quickly that can go. Now, obviously, if you held it for 10 years, it's still killing it over that time period. But it's important to note how quickly that can happen. Had we rolled into a longer drawdown period, that 75% could have easily compounded into 90% to 95%. So the what goes up must come down is very true in a volatile market, though I will definitely give the hat tip to the battle partner, Dave, in pointing out that if you believe markets are going to go up over a full life cycle and you have the right strategy in place, you're going to benefit from the use of leverage.
Okay, and so which of these two ETFs, you've got one or the other or a split decision on the mystery?
I'm going to give it a split decision just simply because they're so unique.
Okay, excellent. And last up is Dave. What is your mystery category and who wins it?
So Ron, as usual, I agree with Mike. This is experts only trail. My mystery category is always portfolio weighting, and our most aggressive strategies typically cap portfolio exposure to TQQQ at 60%, while FANGU, we cap closer to 10%. So the broader diversification and more efficient index process enable TQQ to be a much larger holding. So I give the portfolio weighting win to TQQQ, but our exposure is always with active risk controls, typically with balance, with long-term treasuries. So I completely agree with Mike. This is an experts-only instrument.
So TQQ is your mystery battle category winner?
Correct.
So before we declare a final winner, we're going to let our judges recap their overall winner between TQQQ and FANGU. Let's start with Dave. Who's your overall battle winner?
So Ron, just to recap, FANGU is spectacular and it would beat most other ETFs, but 3 times NASDAQ 100 is the Michael Jordan of ETFs and the American Dream ETF. So TQQ wins in a sweep, but let me add that other Hall of Fame 10-year data points for 3 times leveraged ETFs like technology, TECL, semiconductors, SOXL, and long-term treasuries, TMF, they all strongly outperformed the S&P 500 by historic margins. And the data suggests that leveraged ETFs are the future of investing. And once people see how they can be combined right, and that leverage diversification can be a carton of retirement nest eggs, they'll be dancing like MC Hammer. And it's all in our new book, Investable Benchmarks, and it's a must read.
Okay, let's finish off with Mike. Who's your overall battle winner between these two products?
I cannot pick a winner. I'll say the overall battle winner is the person that bought it 10 years ago versus bought it in 1999 and wrote it those 10 years.
Jane Doe!
So just remember that your timing of 10 years also means a lot. And with this particular example, it can be very impressive, but it can go south in a hurry. Use with caution. I can't speak that enough. And just one comment on the future of investing being leverage. I'm not on that camp.
Okay. Well, we're going to have to leave it there. And according to my battle scorecard, today's ETF battle winner is TQQQ, beating FANGU. In most categories, with the exception of performance, we had a split decision there between Mike and Dave, and also a split decision also on the final battle winner, overall battle winner. But in all the categories, when we add it up, it's TQQQ coming across as the winner. Put this ETF on your radar screen. If you're looking for a leveraged play on technology stocks, then this should definitely be part of the conversation and at least a starting point for further research. And one final point, and I hope we emphasize this If you're going to buy leverage ETFs, always, I repeat, always do it within a disciplined framework. That means sizing your trades correctly. It also means controlling your emotions and also having an exit strategy. So that does it for this round of ETF Battles. Big thanks to Mike and Dave for their excellent work at judging today's matchup. It was an uncomfortable conversation for some of us, but one that we had to have, and one, by the way, that isn't regularly discussed amongst our peers. And we have a public duty, I should say, not just to inform the investing public, but to educate you. At the end of the day, you're going to have the responsibility for making those final investment choices and decisions, and that's not something we or anyone else can do for you. Before signing off, which ETF battles would you like to see in our next episode? Post your thoughts on our YouTube comment section or hit us up on Twitter. Be sure to hashtag ETF Battles. Thanks for watching. I'm Ron DeLegge, and until next time, watch the battle before you invest right here on ETF Guide TV.